From Dubai, I am joined by Deepa Sachanandani joining me from Century Financial. Good morning, Deepa. And
Good morning.
let me ask you, everybody is talking about this recession for next year. Analysts, economists, heads of companies. But the point of difference is how this recession will look like, when it will start, and how long it will last to recover. How do you see the shape of recession next year?
Well, certainly, like you said, central banks across the globe have gone for rate hikes, and when that happens, it will impact consumer spending because it's an inclination for them to start saving more. For the first time since July, the savings rate has gone up to 2.4%. So, consumers, given the high amount of interest rates in the US, they would be inclined to start saving more. And as we all know, the talks of recession have been so loud and clear that they are obviously going to be inclined to start saving and reduce the spending to a certain extent, and this is exactly what the central banks want because they want inflation to come under control. Now, as far as on the goods sides are concerned, we've started seeing the inflation already coming under control, but as far as the service sector is concerned, inflation still remains elevated, which is a cause of concern for the Federal Reserve. So when that happens, we'll see them that they would continue with their rate hikes, and obviously when that is the situation, we could see alarming bells in the economy, because what is happening right now, the current credit in the economy is growing at a steady pace. People are started to resorting to debt to go ahead with their spending. Now, how long can that be sustained is a question, because we have interest rates. Previously, the debts were when you were taking a debt from the bank, that was nearly 0%. So debt-free interest, debt-free loans were available, interest-free loans were available. But now that is not going to be the case. Consumers will have to pay a load of almost 4.2%. So it is going to be a scary situation, and definitely going forward from the mid of probably even the second quarter onwards, we'll start seeing the drastic slowdown in the economy.
So, in your view, when will the impact of this recession start to show clearly in earnings of companies? Is it next quarter? And also, I go back to my previous point, how long will this recession last?
Okay, so as far as the companies' profits are concerned, we've already started seeing some corrections from companies as far as their earnings are concerned. So first quarter we will start to see some reflect from major companies out there, and second quarter the impact will be all the more. And to answer your second question as to how far the impact of recession would last, it could be a bare minimum, a period of 1 to 2 years, and that would also depend on how quickly the Federal Reserve starts to pivoting. So once they see the economy slowing down, and if they gradually start resorting to rate cuts, then probably the recession could be a lot shorter. But if that's not the case, we would see at least a period, at least until 2024, that the economy is in a slowdown mode.
Deepa Sachanandani, thank you so much for having joined us, Head of Research at Century Financial. Thank you so much for
Thank you
having
very
joined
much.
us today.
Thank
Have a
you.
nice day.